Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, let's take a look again on the gold market. So you can see the gold has brought the surprise. As on last session on the previous year, it was really significant performance, and although we actually haven't counted on it that we will get something of this kind at the last trading day. So actually the great performance also has happened on euro currency, but on the gold it looks even better. So in general, this performance stands in agreement with our short-term view that we suggest that within a few months gold should get a friendly background for good performance. It's because Fed currently stands in some informational vacuum. It's because actually in December they have said everything that they would like to, and probably they will stay in some silence until the March meeting. Within this period, market starts to collect the coming statistics, and even on the next week we already will get multiple PMIs and non-farm payrolls release, and within the 2 weeks we also will get the consumption in the way of the retail sales, which is actually a really great forecast for the gross domestic product in the first quarter, and major inflation statistics, so CPI and PPI. All this stuff we will get within the 2 weeks, guys, and that's more than enough to the market to make the assessment of the current situation and to think about. In general, any signs of weakness anywhere, whether it's retail sales or the job market, whether it's slowing down in inflation, all this stuff will be supportive for the gold. It's just because of a few reasons. In general, currently market society has really big doubts that Fed will complete and fill its promises that they will rise rate 3 times in 2022, because market society think that Fed is stepping in thin ice, which is makes it very uncomfortable situation where you have to control inflation, but economic growth is too fragile by far, and any rate change could hurt the recovery pace. So that explains why the reaction on interest rates then is not very significant, and investors not buying the hawkish Fed. So we already talked about this with a couple of previous reports. So second factor that also could really start working is the Omicron fears. So as you understand, within the recent couple of weeks, the Omicron fears were strongly priced in a value of United States dollar. And currently, investors are coming to understanding that it's probably was a bit overpriced, since recent data shows that yes, Omicron is not a very pleasant thing, but it's not as awful as the Delta, and it is possible to live with it. So despite that, we have the increasing number of cases, but still it brings nothing really, new compares to the previous situation with the Delta, when the market has absorbed it and was able to live somehow with it. So the same story here. It means that within the coming weeks, this extra Omicron fears might be priced out of the dollar value. It could show some retracement. Actually, that's what we discussed recently in our Forex report, and the same we could say on the gold, and that also could provide some support to the gold. So in general, overall environment on the gold market currently looks more or less positive. So we need to keep an eye on the statistics that will be released in coming week, and we also need to control the data that indicates the sentiment, this performance of the ETFs, especially SPDR fund, and watching for a commitment of traders report that starts to reflect the changing sentiment. This is crucial within the few weeks, because this is really very important thing that we could understand that where our suggestion is correct. So that's approximately what we have on the fundamental background. Technically, everything looks just perfect. So you can see market shows the upward direction. Trend stands bullish in all time frames except monthly by far. So we have the bullish context here, and on Friday you can see market not has completed few targets that we have on intraday charts, but also hits the daily resistance, which is 1830, approximately 1829. It means that when the coming week, in the beginning of the week, we could count on some pullback, which seems logical currently. At the same time, as acceleration just has started, we do not want to get very deep retracement. So based on some technical patterns that we have on intraday charts, the best solution to us, the best performance when the retracement will be relatively small. So on the 4-hour time frame chart, based on the hand and shoulders, it will be good if market will show the pullback not deeper than the neckline. So for us, it will be absolutely perfect if market will stack somewhere in the range around 1816, 1812, 1820. So this is the neckline and the previous top here. So this will be nice area to watch for from the perspective of the hand and shoulders, especially when you already have the acceleration out of this flag consolidation and in excess of the COP target. So here we should not get too deep retracement, which is not very good for current performance, especially when the market already starts the acceleration after too deep retracement. So that's what about this pattern. Trend here stands bullish as well. From the perspective of the hourly chart, there's also some other reasons why we think that watching for 1880, 1821 area is the best level to consider taking the long position. First of all, this is multiple cluster of different fib levels, so it creates the confluence support with 1818, 1890. There's two levels here. 1820 is previous top and the neckline on the 4 time frame chart. But what's more important is that 1821 is a new yearly pivot point. So market hasn't tested it, and the testing of the yearly pivot in the beginning of the year, that's just great gift that market could give us. So that's another reason and a special reason why we think that this area will be very important. Potentially, a second moment here is that if still we will get the drop right to the 1818, that also will be kind of the bread and butter buy. So you can see this thrusting action looks nice, and the first retracement right to this level, this will be kind of the bread and butter performance. So that is the primary area that we intend to keep an eye on in the beginning of the next week as a potential target of the retracement. So 1818, 1821. That's actually what we have on the gold market. Gold market right now is entering this very interesting period of its performance. So it might be the few first months of the 2022 could be really decisive for the gold market. That could set actually the sentiment for a whole year. So that's why let's see what will happen right in the first week of the new year.